So yeah guys, welcome to my YouTube channel. Today in this video, um just want to do a simple daily top-down analysis of the trade I would like to take next week. That's this week we're about to enter today. Because today is Sunday. I usually do my analysis on Sunday against Monday to Friday. So yeah, if you're new to this my YouTube channel, please do what subscribe and like this video. Thank you. So now let's head straight to the video. This is the USD pair, and on my weekly time frame, as you can see, the market is bullish. And once again, if you notice, this is a demand zone. This zone here, price has tapped on it. Okay, let me use this one to make it a bit better. This zone here, it's a very useful zone because price have tapped on it, did here, broke and retested it. We tapped on it here, and did the same here. So there's possibility that the market is going to be going bullish, and when it does that, to react to this demand zone here and heading straight to our previous high. This is our previous high here. I've already marked it out already. So heading back down to the daily time frame, this is what we can see on the daily time frame. I've already marked out my demand zone here from the weekly time frame, but I'll obviously advise that you make use of your daily time frame, because your weekly, you have to wait for it to play out after a week or two before it can tap in on your marked out areas like this demand zone here, which I did on my weekly time frame. So um let's now shift the demand zone. And a demand zone is the last candle before a downward or upward push. So here is our demand zone. Here is our demand zone, and now we'll be expecting price to push up and react to this area. So now let's go down to our 4-hour time frame, because I'm a day trader. I don't hold my trades for weeks or days, highest for hours. I hold my trade for hours and let it play out and see how it is. That's just how I do it. So you've noticed that price from here, price has been breaking highs. It did here. So obviously we'll be expecting price to break above this previous high, which was here. We're expecting price to break above this previous high, which it's on his way to do it, because he hasn't break the high. He has to form a fully bodied candle. All these ones are just wicks, and wicks don't count when you are going in for a break of structure. Wicks don't count. Wicks are rejections. All these wicks you are seeing here, they are all rejections. So we don't count them as a movement. We just count them as rejections in the market. Okay, or the momentum is reducing. The reduction of the momentum, either the buyers are taking place or the sellers are taking over the buyers, either of both. So this is on the 4 hours time frame. On the 4 hours time frame, we'll mark out our zones. This is a demand zone, so it's a demand zone. You have to mark it out and expect price to break above and tap on it. Once it does that, we'll enter for our buy. But mind you, this is also the 4 hours time frame, and as a day trader, we don't enter on the 4 hours time frame. We go down to the 15-minute time frame. So now going back down to the 1 hour time frame, As you can see, the marked out area which we marked out on the 4 hours time frame, that's the demand zone, is still very much valid. So now we'll wait for price to play out to retest back to this zone, or do a liquidity sweep and bam. So we'll wait for price to play out, to play as seen here. Price can decide to move any of its ways, so you don't have to say, yeah, okay, yeah, we're expecting price to do like this and do like this. No, you don't say it like that. So now this is the 1 hour time frame. We're expecting price to retest this area, to this zone, and then we'll be entering for a buy. You can decide to enter above here and putting our stop loss just some pips down, and then targeting above this previous high, which is this level here. Targeting above this previous high. So wait for this market to play out and see how it does. And going back to the GBP USD, let's go down to the weekly time frame. On the weekly time frame, it's bullish. As you can see, it has been breaking highs all the way from here to here to here, and then you noticed it did a break of structure to the downside, which was this one here, and now I think it's switching sides, but it did not switch any sides, because if you notice, it was about to, but the buyers was still in control of the market and still moving all this low momentum in the market. So but now the market has tapped in on this demand zone here, which is our weekly demand zone, and now it is expected to retrace back down to the previous low, which is this one here, which I've already marked out, this one here. So price will be expected to retrace back down. So now let's go back to the daily time frame. On the daily time frame, last week I actually entered for a sell on this GBP USD, and it went well, it played out well, but I left on a break even. The market took me out on break even. Why? Let's head down to the 5-minute time frame. Okay, yeah, this is it. This is the trade here. This is it. I entered here. This is why I entered my sale. It was a sniper entry because I entered very early. I targeted this low, this previous low here, and the market did play out as well, came down, and I was expecting it to just like a little bullish to the market, then just like a break and retest. Do you understand? A break and retest movement. Yeah, that was what I was expecting it to do, but it didn't play out as well. I expected it to break it. After breaking it, you retest back to this zone and then keep selling. You get, yeah, but it didn't go as planned. It took me out somewhere here. I took a left, but if I had made my decisions very quickly, I would have sold, took profit from here, and then entered for a buy and kept holding, added more positions when it got to this demand zone here, and kept holding to TP. But it didn't play out as expected. So back to the daily time frame. As you can see, on the daily time frame is still on the demand zone, is still trying to make the nice preparation to go in for the sell. So the market is still forming. So throughout this week, the market is going to be bearish on GBP USD. It's going to be bearish on GBP USD. It's going to be bearish. on GBP USD. Yeah, on gold, I really don't trade gold most of the time. But any opportunity, any slight opportunity I get, I try to maximize it. I try to use it very, very well. And if you noticed, gold has been breaking highs for the past 2 weeks now. Now the all-time high it has is 3,500, about 3,502 or so. Yeah, it's been breaking highs and it's surging up, surging up, surging up. So I'll expect you guys to keep buying. If you're buying gold, keep holding your positions. If you're selling, I really don't mind, because you might be selling on the 5 minute time frame or on the 1 minute time frame, which is still very good. But if you're holding your trades, or you've entered a trade on gold before for a buy, I will advise you keep holding your buys. Now let's go down to the 4 hours time frame and see what it creates. And the 4 hours time frame is bullish, it's creating higher highs and lower. As you can see, it's doing that, but and here we think we are having something down. If you notice, this is a head and left and right shoulder, and this is a candlestick formation. Actually, it's a candlestick formation. So we'll be expecting price. Let's see what price is going to be doing. This is a demand zone here. That is a demand zone, and price is, I think, is surging up. We're expecting it to come back to this demand zone and maybe a sell or so. But according to the candlestick pattern, this is a head, left and right shoulder, and it signifies for a sell. A sell. Yeah. Let's go down to the 1 hour time frame. And the 1 hour time frame, yep, still the same thing. So still the same thing. So we're expecting price to come this demand zone. When it does, we will now know whether we can enter for a sell, or price might break above this level here. But if price breaks above this level, that's this high here, price breaks above, let's say price did this and break, we'll be waiting for a retest. If it does a retest, and then we'll enter for a buy at that retest position there. But for now, let's wait for price to retest to this demand zone here. So let's go to GBP JPY. I also trade this pair most of the time. Throughout last week, GBP JPY has been on a bullish movement. This is the daily time frame, and if you notice, these are the movements it has been doing throughout last week. It has been bullish for a while, breaking highs, and it's good. Let's go down to the 4 hours time frame. 4 hours time frame. I missed a lot of trade on this GBP JPY. Actually, I missed this and this. This one, if I had entered it, I would have been taken out, because my stop loss will be around somewhere here. This is a 4 hours time frame. If you go down to the 1 hour time frame, yeah, you'll be seeing the previous high before this one. Sorry, the previous low before this one. I would have been taken out somewhere here also. So I think that I didn't actually enter this trade, but it is what it is. I really find it hard holding trades for days, because I'm a funded trader, so I find it hard holding trade for days. So imagine I went in here and I was expecting price to break above this place and my SL somewhere below this point. I will have held it for days. When I see this, I'll enter more, add more position. When I see something like this, I'll add more positions. You get, but I find it hard doing that, because I'm a funded trader, and prop firms do have their rules and regulations which you are to adhere, unless you get your account breached or something. So So on GBP JPY, let's see, it's been bullish, it's been bullish. So we just have to follow the trend. This is a demand zone here. This is a demand zone. All these things are rejections. We don't count all these. All these are manipulation. You get. So this is a demand zone. That's kind of before the upward movement. So we're expecting price to retest to this zone, which is does this and does this. Let's break above this high. Yeah, that's the only option. That's the only option we have on GBP JPY right now. And I think that's all. That's valid. It's valid. Put our buy orders on top here and go and put our sell just some people, and there you have it. There you have it. There you have it. Let's check card JPY. I recently added this card JPY because I feel that okay, Canadian dollar it's doing well for itself, so I decided to add the pair to JPY pairs and USD pairs. Yeah. So on the daily time frame for card JPY is bearish. It's bearish according to what I'm seeing on the chart. It's bearish because it has been breaking the previous lows. It has been breaking the previous low. Let's go to the 4 hours and see a better view of what is happening. So I really can't see anything here on this card JPY. I really can't see anything, so I'll just leave that for the market to open, then I'll know the decision to make. Let's check GBCHF. Let's go to the daily time frame. Oh my god, same thing. I really can't see anything right now. Let's check GBP cards. Okay, GBP card is bullish. Let's go to the daily time frame. On the daily time frame, it's bullish. It's bullish. Let's go down to the 4 hours. This is a demand zone here. It's a demand zone. Let's go back to the 4-hour time frame and see. In the 4 hours time frame, a demand zone is being created here. Let's mark it out and see. This is the previous low. That's the low down here. And we'll be expecting price to retest this area. And when it does that, it might have a sweep. When you have a sweep, we'll enter for the sell and we'll be targeting below this level. But you know, this is somehow like an unrealistic target. You get this is something like an unrealistic target because this is very not like it's very hard to achieve, but you know, in trading you have to set something that is realistic, something that is very expectable. You get. So let's go down to the 1 hour time frame and know what we can see, where we can target and all of that. So if price decide to come up here, it'll be, let's say we'll be selling from somewhere here, or if price maybe decide to hit a 50% on the demand zone, we're entering here, putting our stop loss just above and targeting this low here, so that's it guys, that's it. I think that's all the pairs that I do trade most of the time, and I'll say I'll say know your risk management, know what you're risking on a trade, because know what you're risking on every trade that you trade, because it's not easy now. Know how much you're risking. Always risk properly. That's your risk management. Risk properly. Risk what you can always afford to get back anytime, any day. So I'll see you guys when the week finally kicks off. And please like this video. Thank you guys. Bye.